Hi, everyone. Okay, did you hear the previous introduction that we just made? We just saw the start broadcast session. So if you heard me before 5 minutes ago when I did the introduction, just type yes in the question section. Otherwise, I will have to welcome you all again into our webinar today, discussing the topic, contact-free commerce for post-crisis economic growth. I'm very pleased to be here again with you on a new topic. And I want to see who's the first one who's going to write something. No, so you haven't heard me. So we started the session, but probably we didn't start the broadcast. So I'm very pleased to welcome you to our webinar today, Contact-Free Commerce for Post-Crisis Economic Growth. And I'm very pleased to have with me my guest speaker, Hadi Raad. I will introduce Hadi again. So Hadi is the Vice President and Regional Head of Digital Solutions for Visa in Central Europe, Middle East, and Africa. He is responsible for driving digital commerce, contactless digital wallets, mobile payments, urban mobility, and the Visa Developer Platform. Hadi works with stakeholders across the ecosystem, including fintechs, issuers, acquirers, and sellers, to innovate, develop, and grow commerce in digital form factors driven by security of payments and seamless user experiences. Hadi and his team have managed the launch of and the growth of Visa's digital enablement program and tokenization in Central Europe, Middle East, and Africa, powering secure mobile wallets and wearable payment options in the region. Before joining Visa, Hadi was head of consumer products marketing at Google in the Middle East and North Africa, working on market development of Google consumer products such as YouTube, Android, Maps, Navigation, Chrome, among others. Prior to that, Hadi served as Principal of Booz Company Digital Media, Telecom and Technology practice in the Middle East, and has worked with some of the largest telecom and technology companies in the region. Before this, Hadi was engaged in the launch of some of the very first internet access and e-commerce startups in his own country, Lebanon. Hadi holds both a Bachelor in Engineering in Computer and Communication and a Master's in Engineering Management from the American University of Beirut. He also holds an MBA from the University of Chicago Booth School of Business. Hadi, it's a pleasure to have you with us today, and apologies again for those who didn't hear the first introduction. Just for a reminder for everyone, you are all muted for elimination of noise purposes, but if you have any questions, we will be taking them throughout the session and towards the end of the session. So please type any questions you have in the question box and in the chat box. So thank you all for joining. Hadi, it's a pleasure to have you with us today, and really at the times when contact-free commerce has become the only thing, possibly one of the few things that is booming at this time of the coronavirus outbreak. How has the current situation accelerated contact-free commerce, and what is its implications on the economic growth post-COVID-19? Hadi, welcome.
Thank you, Hiba, for the introduction and for having me. It's my pleasure to be with you today and to speak about contact-free commerce and how will it impact economic growth post the crisis, and actually already starting to impact and already start to have big growth across globally. So what I'm going to talk about today, Hiba, first, I'm going to speak about how digital payments in general contribute to growth in commerce and efficiency in the economy. Then I'm going to talk about how this recent pandemic has impacted and influenced the behaviors of people and businesses towards commerce in general. Then I'm going also to talk about what are the traits of a successful ecosystem and how can contact-free commerce continue growing moving forward. And I'm going to speak about 3 factors driving this. One, contact-free or contactless payments within the in-store environment, right? So we will all at one point in time return to stores, right? But contact-free or contactless payments within the store environment will continue and will continue growing. Second is I'm going to talk about mobile as a very important form factor, enabling payments and making them default payments. And third, about digital commerce and what is helping and how is digital commerce growing and how is this overall on aggregate helping the overall growth of commerce and the economy. I'm going throughout to talk about some of the enabling capabilities and how they help. I try towards the mid of the session, the webinar, to stop and check a pulse if there are questions that I can answer, or otherwise we'll leave everything to the end. Does that sound good?
That sounds really good. And I can see a few encouraging comments. People are really excited to hear from you, Hadi.
Perfect.
So let's get started.
Looking forward to the questions. So let's get started. All right. So I have to start with this forward-looking statement and disclaimer. Obviously, I will not read it. I will assume everybody is reading it very carefully. Frank, like very shortly, this is about that whatever I'm going to say as a forward-looking statement is not meant to be as a driver for investments or any of that sort, right? It's just for the purpose of best of knowledge and the purpose of awareness and education. All right, so digital payments drive growth and efficiency. Why? If we think of it, right, and when we talk about digital payments, let's keep in mind a comparison to cash versus digital payments. So if we think of it, when we talk about digital payments, what do digital payments provide? One, they are providing access to the consumers to the financial capability of that consumer at the moment of interest. So wherever you are as a consumer, whenever you're trying to buy something, you have the full potential of your financial capability. It's not just about what you have in your pocket as cash. Think of it, whether you're physically buying in a store or you're buying from an e-commerce site, your potential is what your digital credential allows you to, which is tied to your bank account or to some other store value account. But the idea here is not that you're not limited to what you have at that point of time in your pocket. So that in itself helps further commerce and accelerates the growth of commerce. Second is reach. And think of it here as a business, not only as a consumer, you're being able to buy and benchmark from anywhere in the world. Even as a business, you're able to expose your products and services across the world because digital money can travel, right, across the world. You're not limited by a physical currency that needs to be communicated hand to hand. And third, efficiency to the overall economy, because you're saving all the hassles of dealing with cash, the cost of generating these cash notes, the cost of transporting them. Everything that has to do with cash is expensive, and when we're talking about digital money or digital payments, we're saving a lot of that. Set aside all the transparency that it brings to the economy, so all the tax collection and all of that is fully transparent, and the money spent, again, everything is logged because it's digital. So all of that transparency brings lots of efficiency to the economy, and accordingly, all of that contribute to growth. Actually, some earlier study that we have, Visa has commissioned previously has shown that there is a strong correlation between digital payments and the impact on the GDP. So the potential in a study that was run for 100 cities globally, there was a total, by adopting, assuming a cashless scenario across these 100 cities, there was a saving of net benefits of around $470 billion. And that crosses consumer, businesses, and the government, so on aggregate. And then if taken in terms of economic impact over 15 years, that impact is $12 trillion. And if you annualize it, that's an average annual 0.19% per year increase to the GDP. So that's quite significant if we think about it. So the move from cash to digital has been ongoing, right? This has been growing significantly over the years. Year after year, we're seeing that digital payments are replacing cash for all the benefits that I've been talking about. But with the recent pandemic, we've seen a specific accelerating shift to digital and to completely contact-free commerce. And I list some of the trends that we've been noticing. One is that more sellers getting online, especially small sellers that weren't online before. So if we look, for example, at Shopify's numbers, like a 60% increase in sellers leveraging the Shopify platform and coming online between March and April in their sellers. Second trend is initiatives to discover new sellers. So with lots of sellers coming online, there's an issue or there's a challenge in discoverability. How would you know that seller A or seller B or seller C are online, and how do you find them, right? And we're seeing lots of consumer-facing apps or sites that are helping to discover these new sellers. Shopify themselves have launched a consumer-facing app in that regard, and Visa, we have launched a site that logs where is business activity happening, that consumers can just search and learn about businesses that are either transacting all over again or are new sellers coming into the ecosystem. A third trend that is also helping towards contact-free commerce is suspension of cash on delivery. For those living in countries where cash on delivery is popular or who know what cash on delivery is, there's a trend with a segment of consumers that they transact online in an e-commerce site, but when it comes to payment, they wait until they receive the product and they pay in cash at the time of delivery. So we're seeing a number of merchants globally suspending the cash on delivery option, even if for the period of the pandemic. But all of this is helping consumers to get more comfortable in paying online. Examples are Amazon in India, Noon in the UAE. Fourth is contact-free delivery. So we're also seeing that lots of merchants are offering an option to deliver the products home when you purchase online, but in a contact-free manner where the delivery agent just drop the products in front of the home instead of a hand delivery. So that means also that the payment happened online and there is no contact at all. And finally, increased regulations and efforts to limit cash in circulation. We've seen regulators that are increasing the contactless payments, no CVM limits, and excuse the jargon here, I'll explain more about that. But this is when you tap a card, and I'm going to talk more about contactless moving forward, and then that limit, that beyond that limit, you need to enter a PIN. To avoid that entry of the PIN with a higher value, right? Which means consumers are not touching the POS machine and keying in numbers. Regulators, Visa also has changed the CVM limits so that merchants can increase those and then consumers don't have to input a PIN on the POS device while maintaining the same level of security of the transaction. We've also seen some regulators or some central banks guaranteeing banknotes, increasing personal transfer limits, etc. So lots of initiatives all helping in the direction of promoting more digital payments and contact-free payments in commerce transactions. Also, if we look from the consumer front, we're seeing also a shift to digital-first experiences and to a contact-free journey mindset in consumers. So the pandemic has resulted in millions of users and consumers shopping online for the first time. For example, in the US only, there is an 18% last month in terms of e-commerce activity. In Latin America, just to give one region as an example, there has been 13 million first-time e-commerce users by March, so the first 3 months of the year. January to March, 13 million new e-com users. And we're seeing the same here in this part of the world. Lots of first-time consumers shopping online. There is also the trend of contact-free journeys, like consumers, this social distancing or physical distancing. Even consumers that have to go to shops and shop in stores. There is this mindset that I want to remain far. I don't want to touch the cash or get return cash from the supermarket. I don't want to touch the payment terminal. All of that kind of mentality that is new. That is a mentality that appeared with this recent pandemic. So these are two very obvious trends also from a consumer perspective. Okay, so as I said earlier, digital payments have been growing even before the pandemic. But why isn't digital 100% penetration yet in terms of payments? Why is there still cash? And why did I talk before about the benefits of moving cashless and that digital is growing, but there is still cash in circulation? This is because of some barriers to digital payment adoption. Let me list some of them. One could be the limited access to digital payments products from a consumer perspective, right? A second could be inadequate digital infrastructure. Maybe the need for an internet connections for merchant or some other infrastructure related aspects that's limiting the adoption of digital payments. And again, here I'm referring to digital payments, whether inside the store or e-commerce. It doesn't have to be just e-commerce only. And then three behavioral type of barriers, the cultural and habitual attachment to cash, which we're seeing that the recent pandemic situation is helping cross that barrier a lot. Security and privacy concerns. Also, some consumers might have security and privacy concerns, and some misperceptions sometimes on the merchant front about the cost of digital payment and comparing it to the cost of receiving cash. These are some of the reasons or barriers why we don't have 100% digital payments across the economy. So what is being done to overcome these kind of barriers, in addition to the behavioral shift that's happening now naturally, even more with the pandemic? Before we get there, I want to give an example of successful traits of successful digital ecosystems. So what make an ecosystem successful? And I'm going to take those learnings and apply them to digital payments, right? And these are examples that everybody can connect to. We all can connect to these kind of examples. If we think of it, speed matters more than it ever has. in today's digital world, speed is very important. No one is willing to wait 10 seconds, let's say, for a video to start if you're watching a video online. You consumers, digital consumers of today, want very fast services. Second is on-demand availability of the products that you want, simply accessible and available. Think of YouTube, think of Uber, think of Apple Music, etc. Simple and on-demand and available. And the third very important one is interoperability. And I like here to give the example of smart home technology. If you think of smart home, if the devices are not connected and they don't talk to each other and they're not synchronized in a way that they are interoperable, if you enter the house, then the light turns on, etc. If that interoperability among different ecosystem doesn't, or different products doesn't exist, then scale is very difficult. You need things to be interoperable, work everywhere, always and everywhere in the same way for adoption of these services. So if we now switch back to payments, 3 trends have been driving towards touchless payments in commerce. One is the availability of secure, ubiquitous, fast, and simple payment transactions, and I'm going to talk about that in an in-store fashion. It has been helping a lot, and now it is even more and more popular, given that it's touch-free, touchless, contactless. Second is payment enablement in digital form factors, in particular the mobile device. The mobile device is a very important device for consumers. They do their entertainment on it, they do their video watching, they do like everything. The consumer is in a mobile first mindset. It's also for payment. So I'm going to talk about that. And third is the accelerated shift to digital commerce or e-commerce. And with that, automatically the payment is getting digital. So these 3 trends together are helping the shift to from cash to digital payments, and not only digital, touchless or contact-free payments. So let's start with the first. In the store, contactless payments are a form of payments. Think of the card that you have. That card has the capability to be tapped on the terminal without inserting it, without touching the payment terminal. You tap that card on the terminal and the payment happens. It's very fast. No PIN is needed unless it's above a certain limit, and that limit is the limit I was talking about earlier. I think in the UAE it's, if I'm not wrong, something like 300 dirhams, something like that. I'm not sure about the number, don't quote me. Speed is faster. It's fast. It's just faster than any other payment method. You just tap and go. And security, because it carries the same security of a chip transaction. Actually, the transaction is a chip transaction. The card remains in the cardholder hands. It's just a tap. That's very secure, very fast, and very convenient. Contactless payment have been growing very fast. Like, it's more than globally 60% of the face-to-face transactions are contactless. In this part of the world, it's even higher. They have been growing very fast, and with this recent pandemic, the growth has been even accelerating. What's important about contactless is it's becoming habitual for the consumer. And this is the interoperability that I was talking about. Wherever you go, you can just tap and go. You leave your home, you grab a coffee, you pay for that with a tap of your card. You commute in a metro, and we're working with lots of public transit operators to enable contactless payments as the form of payment. You have your lunch, and it is already enabled in many cities across CEMEA. Business lunch, you pay with contactless. You grab a taxi, you pay contactless. Afternoon snack, etc. Wherever you go in your market, wherever you travel, it's the same way of payment, and that's making it a habit. And these kind of products are products that can scale. When it becomes habitual, it becomes something that the consumer is used to, much easier than paying in cash. Now, as we move that payment form factor from a plastic cards into much more digital form factors, we introduced technology called tokenization to enable payments in digital form factors. Tokenization is about taking those credentials of payments and moving them in a secure way. I'll talk a little bit more about it, into lots of others form factors, whether this is a mobile or an IoT device or what have you. So what is tokenization? Very briefly. First of all, instead of the card number that you see, the PAN, we call it PAN, it's the card number that you see on the plastic card. There's a token. It's a 16-digit number, but that you don't see, that replaces that 16-digit number. That's what gets communicated to the seller. Those tokens are domain specific. So a token that you use, let's say on a mobile device, is only works for that mobile device, or a token that you use for a particular seller only works for that particular seller. And these tokens are further protected with a cryptogram that travels with the transaction, so they are more secure. I'll leave it at this level of talking about tokens. Obviously, it's a very large topic and lots of depth can be there, but I think that's enough for us to move forward with our discussion. So tokens, or the token service, is what helped us take Visa's credential into mobiles. So those use cases that are growing across the region differently in different markets across the world. Apple Pay, Google Pay, Samsung Pay, Garmin Pay as a wearable, Fitbit Pay. So you tap your mobile device now on the terminal. Not only your card, you can tap your mobile device, and the payment happens just in the same way as a contactless transaction. You confirm yourself as a consumer with the biometric, and that's it. Touchless, contact-free. Consumers are not touching the terminal in any way. So what is in the mobile device is not the actual card number, it's the token that I talked about. And that token only works for that specific domain. And on the seller side, again, mobile comes into the picture with tap to phone. Tap to phone is another way of making sellers accept digital payments by making the phone or the smartphone itself an acceptance device. And this is very helpful for small sellers, or maybe for large stores that wanna avoid the queues, payment queues, and just take payments, we call them queue busting solutions, take payments away from the main queue of the supermarket. Again, very helpful in the case of physical distancing and contact-free commerce. With that, I'm going to switch to digital commerce. So we're going away now from the store experiences into the digital commerce experiences, or e-commerce. Let me pause here to see if there are any questions that I can answer before I move to digital commerce or e-commerce.
Yeah, Hadi, we have a couple of questions. So okay. We start with the first one. So the first question is, he's asking, Michael is asking, do you worry about digital payment economy? Digital payment is very convenient. However, it's not as safe as we expected. Could you talk more about this instead of how it's being beneficial?
Yeah, I think I covered that.
Safety.
Yeah, it is. Everything is in comparison, right? It is very safe when we look at fraud numbers. So when we look at what percentage of transactions are fraud, the numbers are tiny, especially like in this part of the world, really tiny numbers, globally and here. So no, everything is in relative terms, but it's very safe. It's safer than cash in many ways. It's much easier to lose your cash than to lose your digital payments or to get hacked on digital payments. It's very difficult. And then with the added technologies that I mentioned, for example, chip, contactless, this is extremely secure, very secure. Or tokens in the case of mobile payments, very secure. Fraud levels are so small. It's much safer than any other payment method.
Okay, another question is from Ibrahim. He's asking, does Visa have programs to enable SMEs to transfer to digital payments?
If we're talking about in the store, examples are what I mentioned as tap to phone, and that needs to be enabled through the acquirer. Everything that Visa offers is through the banks, right? Like all of these products are enabled through banks, Visa members. So there are solutions. Tap to phone is one of them. If we're talking about online, I'll talk later about some other solutions, but they need to be enabled either through your gateway or through your acquirer.
So they're asking us, Hiba is saying that she hasn't seen tokens used in Saudi Arabia. Are they introduced there?
They are. Already there are two solutions that operate in tap to pay with mobiles. Apple Pay is live in Saudi Arabia and it uses tokens as an example.
So we have a sure. Should we take one more question before we proceed?
Yeah, one more question and then yeah.
Okay, so he's asking, how do you see the digital payment landscape getting transformed with blockchain cryptocurrency introduction?
Okay, so this is a like wide question to answer because it mentions a number of things. Cryptocurrency is one thing. It's a form of digital money, right? But it's very different than blockchain as a technology. I would separate these two. And then there are different forms of cryptocurrencies, whether they are tied to fiat currencies or not. But let us position them this way. They are a form of digital payments. Whether they scale or not depends on the form. What form are we talking about them? But they are one form of replacing cash. At this stage, they are still extremely small. But depending on the different forms, things might go in different ways. All right.
Okay, let's proceed.
Okay, so we've talked about digital payments in the store, and we've talked about mobile as a form factor that is helping even more and more in enabling digital payments from the consumer side and from the seller side. Now we're going to talk about digital commerce or e-commerce. So e-commerce has been growing very fast, regardless and before the pandemic situation. We've seen growth rates, as you can, these are worldwide growth rates that you can see in the chart, and percentage change every year, double digit. And lots of factors help that. Keep in mind, as I discussed earlier, e-commerce or digital commerce is location independent, enables location independent shopping, increasingly mobile, it's contact free, so it serves all the drivers of consumer preference. And lots of technologies are increasingly relevant, especially at this time where more and more sellers are going online and thinking of contact-free, whether the use of IoT in the supply chain or artificial intelligence for products discoverability, or try before you buy technology. All of these, I believe, are technologies that will increasingly be popular now with the recent trends that we're seeing from the seller and the consumer side. This part of the world, specifically if I zoom into Middle East and North Africa, has been growing fastest as a region. UAE has been also one of the largest markets in terms of e-commerce, and lots of categories have been contributing to the growth of e-commerce. Government services have been large and huge and growing very fast. QSR growing very fast, transport growing very fast, and general retail. And more recently with the pandemic, food and grocery, which has been like one of the smallest, 1%, is also growing very fast as a category. So if we think of it in e-commerce, the new digital economy requires payment credentials that are on file for us to make sure, or for us to have an experience in e-commerce that is simple and convenient while being secure, similar to the experience that I described in the store. In e-commerce, if we think of it, face-to-face commerce is moving online. And what I mean by that, think of experiences like Uber, right? You go in a taxi, that used to be a face-to-face commerce experience. You used to pay the taxi either cash or by your credit card face-to-face. Now this goes in the background as an experience. If you know Cafu here in the UAE, it's a gasoline service. Again, payment is in the background through a card on file transaction. So card on file or credentials on file are increasingly very important. There's also the rise of the subscription economy. You see lots of those set and forget experiences like Netflix, Apple Music, Amazon Prime, etc. Then there is the encountered commerce trend, where commerce is following the consumer wherever they are, even in social media, to capture the interest, to capture the sales at the moment of interest of the consumer. And finally, connected devices. With lots of connected devices, all of these connected devices many times do not have screens, and accordingly the importance of having credentials on file, or what is widely known as card on file, to ensure that the transaction is simple and convenient, but without losing security of the transaction. So this is where tokens again were brought into the e-commerce world. And tokens in card on file experiences replaces the card credentials, ensure a unique cryptogram that travels with the transaction, domain control. So again, the token that you add to your, let's say, Netflix site is only relevant to Netflix. If it gets compromised in one way or the other, it's useless. It's only a credential that is relevant to Netflix. Cardholder verification that could happen through a fingerprint, ability to remember a device, and all this information is transferred to the bank, to the issuer, ability to push the card all the way from the issuer to the merchant without manual intervention. The same card art that shows at the merchant is the card art of your physical plastic card. And life cycle management, which is the ability to update of the card information in the background. Think of it today, when your card expires or when you receive a new card, you have to go and update every single site that uses or that has your card on file, otherwise your transactions will get blocked. With the lifecycle management capability of tokens, all of that happens in the background, so very convenient to the consumer. And again, when we think of guest checkout, so not only card on file, guest checkout, these long mobile forms have been a challenge. They are not as easy as the tap to pay experience that I described earlier, right? You have to fill forms, sometimes many fields that you have to fill. It's just a cumbersome experience if you think about it, and we compare it to how fast is the tap to pay experience. So this is where, again, we introduced the Visa click to pay experience, which is based on the EMV standard. It also builds on the tokenization capabilities that I described earlier. It allows remembering of the device, no passwords to be used, and the idea is to move to this kind of experience. So from the form experience of filling forms that I was talking about earlier, which could probably take minutes, to a simple tap to pay on your mobile. You just select the card, click to pay on the mobile. You select the card, and then you complete the payment. In the background, what's happening, all these security aspects that I was talking about of the token. A cryptogram is traveling with the transaction that carries much more information, that secures the transaction in the background. The security aspects of the token, where the number or the number itself is devalued in the way that if it is compromised and used anywhere else, it's not going to work, it's not going to function, it's going to be declined. Everything that I talked about tokens, plus the convenience of a click-to-pay experience. So what we've seen is that tokens have been averaging a 3% increase in authorization rates in e-commerce transactions. So better authorization by banks, less declines by the bank. Why? Because more information is being sent. Banks are more comfortable authorizing the transactions. And we've seen a 26% on average decline of fraud rates in e-commerce. Like, we know that if we compare e-commerce to face-to-face, e-commerce has higher fraud rate and lower authorization rate than face-to-face or in-store transactions. With tokens, whether with card-on-file tokens that I talked about earlier, or with tokens inside a click-to-pay or secure remote commerce, then we're seeing an improvement in the authorization rate and a reduction in the fraud rate. And finally, I want to talk about Visa Secure, which we have also made announcements about very recently here in this part of the world. So Visa Secure helps merchants and issuers authenticate e-commerce transaction with expanded set of data that can reduce the friction. So what happens is that more data, again, is being transferred to the issuer. Like Visa Secure, if you want, is the next version of 3D Secure version 1.0, or the verified by Visa, where consumer used to get this PIN code to enter when they make an e-commerce transaction. So what Visa Secure brings is much more data is being communicated to the issuer, so that then many times the authentication is invisible to the consumer, and the issuer will not step up the transaction and will not challenge the consumer with an additional PIN, which is a friction to the transaction. Once they are comfortable, they are sure to a good level that the transaction is safe. No need to challenge the consumer with an additional friction of a step-up SMS or OTP or whatever is that, and the transaction passes through safely and securely, which means much happier merchant because of less friction, much happier consumer, again because of less friction and with the same safety of the transaction, and more transactions happening online. So Finally, as a wrap up, and I wanted to leave the last 10 minutes for any additional Q&A, with the increase in more and more businesses embracing digital, whether online or inside the store, with more digital commerce, with this digital first consumer mindset and the touchless payments, driving all in all growth in commerce. Those technologies that I talk about have been helping address these trends and these requirements. The tap to pay that we talked about inside the store, tokenization that helped moving the credential to digital form factor, such as mobile, click to pay, SRC, that I talked about in e-commerce. Visa Direct, I haven't talked about it, but it's the P2P capability. It's a capability that allows money transfer from person to person, or disbursements from a business to consumers, and other use cases. All of that, in addition to other capabilities that could be helpful in that context, such as transaction controls that help giving more control to the consumer in setting different rules, when and what kind of payments to let through or not. All of that are capabilities that are helping towards more and more digital payments, and accordingly more and more commerce, and accordingly hopefully helping growing the economies. With that, I want to stop and see if there are more questions to take.
Yeah, Hadi, we have questions. So let's start looking at some of these. We've answered that. Let's go to here's a question from Muhammad. He's asking, will the increasing adoption of digital payments pave the way for more adoption for blockchain in the banking industry?
Blockchain is a distributed ledger technology. Digital payments or payments could be one use case that leverage blockchain, and probably it might be one of the use cases that let bank look into the blockchain technology. But blockchain technology would have much more use cases than payments only. Think about contract signing or any other form of use case that requires a distributed ledger rather than a centralized ledger sort of ecosystem, and that's what blockchain offers. So I would agree that digital payments probably is a use case that led banks looking into blockchain as a technology, but it's not the only technology, neither for banks nor for other stakeholders across. Hello?
Hi, Hadi. Yes,
Yeah.
so we have a question from David.
Yeah.
David is asking, so in the recent years, banks have suffered from a decline in consumer trust as they are seen to push customers into new credit cards with ever increases in their credit limits. At the same time, there has been significant global increase in household non-mortgage debt. How will banks respond to the social challenge to ensure households do not get into unsustainable debt, particularly as the world enters into a period of increasing unemployment as a result of COVID-19?
Yeah, I believe it's very important that the interests and behaviors and demand of customers are met in the way that customers' preferences are. If some customers are interested in controls, then it's very important to provide these type of controls to the consumer. So for example, if you wanna offer a card to a consumer that is that has some sort of worries, I don't wanna overspend weekly a certain amount, or monthly cross-border another amount, or this type of merchant categories or seller categories, I believe that it's super important to provide this kind of capability to the consumer, and these technologies exist and can be offered. So you can offer the consumer the ability to control the card in the way that the consumer wants. You could put controls in terms of, and you can give this control to the consumer themselves, like giving the consumer control of, I want on this particular card number to spend X dollars or dirhams a week or a month. I want to limit this type of spend category, etc. So if your consumers, or if the consumers are demanding these kind of capabilities, technology allows these kind of capabilities, and they need to be offered. That's my opinion on this.
Thank you, Hadi. Another question, Mohammed is asking, how will this increasing digital payments adoption and consumer digital activity help the banks to tailor and customize their services better towards the consumer? I think this may be a little bit relevant to the previous question.
I think so, yeah, if I got the question correctly.
Yeah.
Yeah.
So we have a few questions. I can see that there are some of the attendees who have their own stores, and they're asking if they should manage, have a browser interface. Someone is asking, someone else is asking if.
Yeah, that's my advice to sellers, new sellers that want to come online. They need to look out for gateways that offer capabilities that I've been talking about. So for example, subscription models are very important, right? Very important to the business, to the sustainability of a constant revenue for businesses, etc. As long as the business model allows subscription model, they are very important. And for subscription models, you need the card credentials on file. So it's very important to look out for capabilities such as card on file tokenization that I talked about. And gateways are increasingly offering this kind of capabilities. We just announced a few months earlier, we announced that payment volumes of $1 trillion in payment volumes are now part of the tokenization program. So they are getting launched, right? They are capable of offering this capability. And we just announced 28 new partners globally last week, actually, and 14 of them were in this part of the world, CEMEA, Central Europe, Middle East, and Africa. So look out for these kind of capabilities from your gateways. Ask about this kind of capabilities because they help your business. These kind of products as a small business, you will not get them directly from Visa. You will get them from your gateway, and your payment gateway will be integrated with Visa to offer these kind of capabilities that I've been talking about.
Thank you, Hadi. Prisha is asking, do you think there is a scope to expand this to InsurTech and not only FinTech?
I'm not sure I get the question clearly, but if we're talking about
insurance company.
Yeah, digitizing the insurance industry, I think that will happen as well. If that's the question, then I believe that will happen as well. We're heading faster and faster toward digital economies. Everything is getting digital, right? And it's not only this pandemic. I think this pandemic speeded up that transition and created further urgencies. But that has been happening always. And now with the new mindset, with the new evolution, I only see it growing faster and faster. And not only fintech, everywhere, right? Like we've seen even education going digital, right? All of us, our kids are going to school through remote distant
online
learning.
platforms.
Social gatherings are over video conferencing, right? So everything is going digital. I'm not saying everything will remain the same, but it's just that creating this habit with this pandemic that happened will just make things available and in the mindset of consumers, and it will grow. Digital will grow as a result of what happened. So yeah, back to the question, I wouldn't see why not also in insurtech will go even more and more, insurance industry will go even more and more digital.
Right, so do we have more time to take one more question? I know it's 4.
I can take one last question.
Yes, okay, one last question. So Hiba is asking, what are the 3 main things that you would advise international companies that are interested in GCC, maybe to do business with the GCC, to do in terms of e-commerce?
Sorry, can you come again with the question?
So what are the 3 main things that you would advise international companies that are interested to do business in the GCC region? What should they do for in terms of e-commerce? So perhaps a company in Jordan that is interested to do business with other companies in the GCC region.
I think it's very important to understand the consumer in the region, the preferences of the consumer in this part of the world. Localization is super important. It's very difficult to just bring a global capability and deploy it as is without localizing it to what the consumers prefer. All right, this applies to e-commerce as much as it applies to any other offering, but in e-commerce as well. Catering for customer needs, localizing, and factoring in the consumer preferences, the payment options that the consumers like, the experiences that this part of the consumer like. Again, I would summarize it by localize your offerings. Don't just come in with default global offerings into the region. Localize them to what the consumer in this part of the world want.
Thank you so much, Hadi. I know we have so many questions, and I do apologize for not being able to take them within this hour. But this session is recorded, and we will be sharing the recording with all of you who have registered. So perhaps you can go back to the recording, and maybe you will have some answers to the questions that you've asked. Hadi, it's a pleasure to have you with us today. Thank you so much for the presentation, for your insights and nuances that you have shared with everyone. It's a pleasure to have you with us. For the attendees, thank you for taking the time to listen to us today, and for staying tuned to all our events. For future webinars, please refer to our website, www.manchester.ac.ae. Go to the events section. We have a list of webinars that we are running on a weekly basis. So just feel free to go to the website and register. We will have more of these webinars on a weekly basis. So thank you all. Thank you, Hadi, again. Thank you for Visa for allowing you also to be with us today and to share these great insights. So it's a pleasure to have you.
Thank you, Hiba. Thank you also to the University of Manchester for the opportunity, and thank you for all the attendees. It was my pleasure.
Thank you again. Thank you, everyone. Stay tuned to our social media platforms also, where we're posting news about our events and about our webinars. We hope to see you again soon. So take care meanwhile, and I wish you all a very restful evening. Thank you.